Welcome back. Today we're doing another Atkore video. Now before I start, I want to reiterate that this is my largest position, so you have to take what I say with a grain of salt. This is also one of the companies I really like, probably my favorite company. However, this is going to be a tough love session because they released earnings recently and I was not pleased with it. I was definitely not pleased with the earnings call. I'm going to go through that. And then we're going to talk about the new fair value, in my opinion. So just look at these last 5 days. I mean, they announced right here on August 5th. And, it's been down about, 20% since then, which puts them down 40% year to date. Yeah, that has hurt for sure. So let's look at this earnings release that upset everybody, all right? And the big thing, I'm just going to skip to it, is the updated outlook, okay? Because people can deal with misses, but whenever you combine a miss with a lowered outlook, I mean, it gets ugly real fast, okay? So last quarter, they reduced their outlook from I want to say 17 something to 16 something, and now they've reduced it all the way to $14 a share, all right? Like I said, you add that on top of a missed earnings and it gets ugly, right? But that is what it is. I wasn't going to react to that one way or the other, but it's the earnings transcript that I really want to go into. And to do that, we go to Seeking Alpha. They do a great job here, okay? Transcripts for every company is located. They have a whole tab for it, and you can just go to the earnings call transcript. And usually, if I am too lazy to log into an earnings call, I'll just have ChatGPT summarize the transcript for me. But it's also a good tool to go back and look at old ones as well. And I'm going to show you an example of that. So anyway, for those of you who don't know, Seeking Alpha, link in the description. All right. So the first thing I want to touch on is, let's see. All right. No mention of the $18 a share. So I can Control F, 18, nothing found. Okay. So if you remember, for the last few quarters, they've been talking like, hey, look, we're going to be making $18 a share at some point, in the near future, 2025. And the short sellers were saying, no. That was their thesis, was that, hey, this was a COVID boom. It's going to come back down to earth. Atkore management was saying it's going to be $18 a share. Well, now, if you look at 2025, so I'll Control F 2025 outlook. Let's see. Okay, here it is. This paragraph here. But the big thing is our initial Ebitda estimate for 2025 will be about $650 million. Now, that is nowhere close to $18 a share, all right? And to illustrate that, I'm going to take this Ebitda number, I'm going to put it in the calculator and show you how to get to an earnings per share, right? So $650 million Ebitda. First, we're going to subtract out interest, which is about 40 per year. And then we're going to subtract out depreciation, which I think is 120. All right, so 490. And that's pre-tax, so we're going to get to post-tax, which means we multiply that by 0.79 because you multiply by, your tax rate is 21%, right? All right, so we're left with a net income, let's say, of $387 million. Total shares outstanding is somewhere in the neighborhood of 33, 34, right? So let's say 34, or it will be by the time 2025 rolls around, let's say. All right, so I'm at $11.40. Much different than 18. I mean, that is a huge difference, and they just glossed over it. They just kind of casually threw out here that they were lowering Ebitda for 2025 to $650 million, okay? So I did not like that. And I hate to dogpile on this, but the other thing that upsets me is that the short said one thing. I really trusted the management of the company, that the management would know the business better than the short sellers who were claiming that it wasn't going to do this, but it's just disappointing whenever some people on Wall Street know the market better than management itself, right? Which it's either they knew about it and didn't say anything, or they didn't know about it, and both of those are bad. And I will say, and I'm going to jump to this real quick, this is insider sales, and I talked about this already, but maybe they did know because, look at this. They were really offloading shares at, 170, 150, that sort of thing, so it's kind of starting to make sense now, right? But it's still disappointing. All right, let's go back to the transcript. The other thing I want to talk about is this Mexico thing that they brought up, because this also kind of pissed me off. All right. So they said that they're facing a challenge from Mexico importing a bunch of conduit. All right. And I've been following the company for a while. This is the first I've heard about this, so I was kind of surprised. And then later in the conversation, somebody asks him to elaborate on it. And so he does, and he says that Mexico's given about 20%, all right? 20% of the market share, which is a lot. And he said the reason is that we pretty much have a law that's not being enforced. But this is what really got me there. He said it's been going on since 2015, 2017. Well, I went back to like every earnings call I could, the transcripts, and Control F Mexico, and I did not find any mention of this before. And it's been going on for years now. And the first time we hear about it is whenever they need to pull it out as an excuse for missed earnings. Like that, I really don't like that, okay? Anyway, the other thing I didn't like about this is that they made this comment about the administration. So basically, they're saying that this Mexico problem will not go away unless we have an administration change in November. And throughout the call, they did kind of make the comment that they weren't confident giving an estimate for next year until the election happened. And look, I agree with them, okay? There's a certain administration that'll definitely be better at enforcing tariffs against Mexico and tariffs against other companies and help U.S. businesses. I mean, I was working in manufacturing in 2020, right? And I remember the election, we actually had our CEO in town. And, it was all this turmoil about who was winning, that sort of thing. And then it came out that the Democrats were going to win. And I asked him, like, so what does this mean, And he said, oh, it means we're fudged. But he didn't say fudged. And, like, that same attitude, I guess, applies to other industries. However, I don't like really having to rely on an external force like an administration change for your moat. You want to have a moat that doesn't care who's running the government. You want a moat that's so strong that that kind of stuff doesn't matter. But it is what it is. So if you are an Atkore shareholder, just know that the election definitely has consequences for you. But all that being said, there are still really positive things here, okay? They're making a lot of money, and they're being very good at returning it to shareholders. I'll go back to the earnings release and show you that they repurchased $125 million of shares just in that quarter alone. Now, if they spend that type of money and start buying it back whenever it's sub $100 a share, I mean, you're talking retiring a huge amount of shares per quarter. So if they're spending 125, I mean, this is easy math. If they're spending 125 million, and look, I'll do it in the calculator just to do it. 1, 2, 3, 125 million a quarter, and they're paying less than $100 a share. So divide that by 100. That means they're retiring 1.25 million shares a quarter, which on a yearly basis means 5 million shares a year. The current share count, I think, is like 35, 34. Let's see if we can find out real quick on this thing. Current share count is, well, look, we'll back calculate it here. So net income is 123 divided by 3.33, 123, 417, 37. Okay, so the net share count's 37. I think what I was thinking is that I expect it to get to 33, 34. So 37 million shares outstanding. They're buying back, 5 million a year at this rate if the stock stays low. I mean, that's a huge return. Another way to look at it is if they're returning 500 million on a $3.42 billion market cap, that's like a 15% yield, okay? So, I mean, I still very much like the company. I think this was a hit to the value, but I don't think it was anything near as bad as how the market reacted. And I'm going to go through the DCF one more time to show you kind of what I'm talking about, okay? So I think I said $11.40, so $11.40. Let's say that next year they make $11.40, and then they still are planning to, and I believe them, to climb up to that $18 a share, right? So what 5-year growth do I need to get to 18? Let's see, is it like 9%? No, higher than that. 11%. Okay, 12%. So 12% growth from this very low amount, which I know 12% growth is usually high, but it's not high whenever you're talking about from a pit. 12 is high if you're going peak to peak, but if you're going pit to peak, it's not that high. Okay, so let's say they're growing here at 12% a year, and then perpetual growth, let's say 3%. All right, discount rate of 15%, which is very conservative. puts fair value at 124. So I don't think fair value is 124. I think that this is the fair value of the worst case scenario, where they go to their Ebitda floor, which was at 650 million, and then kind of claw back up. Any positive change is going to severely impact that, okay? And I've really debated whether or not I should put a fair value here, because whenever I think about it, personally, I think I would be disappointed if this company was bought out by, like, for anything less than $200 a share, and maybe $220 a share. You know, Wire was just bought out. This one's low debt. It's definitely a target, right? So I think I'd be disappointed in anything less than that. I still think there's possibilities for really high upside if stuff changes. I mean, you could see a short squeeze, because I don't know who's shorting this. Why are you shorting companies that have no debt, have positive cash flow, returning value to shareholders? You know, there's a ton of other companies that are in a lot of debt and are selling at 80 PE, 80 plus, 100 plus PE. Like that, it doesn't make sense to me. But that's why I'm not at Wall Street, right? So anyway, hope you enjoyed the video. Let me know your thoughts below. Like, comment, subscribe. I'll see you next time.